Hey everybody, hope everyone's doing well and had a good trading day. This is the Emini review for Wednesday, July 17th, 2024. And we'll start with the daily chart. And coming into the day, the market's been in this tight trading range. And I keep mentioning we've had 3 pushes up. So we've had these 3 big pushes up. And we've had 3 smaller pushes up here. And you can see we're in this tight trading range. There's a couple of reasons to expect resistance above, sellers above this bar, the July 15th bar. And then we had this bull trend bar on the daily chart, but I mentioned it's a little deceiving because when you crack open the bar and look at for example, the 5-minute chart, you can see it was a really broad bull channel and it was basically a trading range day. So it's not as strong as it appears. So the expectation was that there would be sellers above yesterday's high. And it's not a good sell signal bar, so maybe buyers below. But the problem is that you'd be buying in the top third of this tight trading range. So the buyers may not come in until somewhere lower. And then, of course, coming into the day, we had a huge gap down. You can see here's yesterday's close, and here's today's open. So this gap down, you can think of gaps as breakouts. They function the same way. And so what you can basically do is imagine the space between the close of yesterday and the open of today as one big bear trend bar. Now I think it's worth, I don't do this in every review, but I think it's worth looking at the Globex chart coming into the day. With such a big gap down, it's good to know what was actually happening. So this is the 15-minute chart, and here is the close of yesterday. And here's the open of the day today. So we have a bear trend coming into the day. It's a fairly tight channel. No trend line break. These two lines are pretty close together. The buying pressure isn't great. The pullbacks are brief. This one's sideways, another brief one. So it's a pretty tight and strong bear channel coming into the day. So that's good to know. Because when you have big gaps, you don't always know whether it's a big climax and maybe a trading range in the Globex session, or if it actually was a trend. In this case, it was more of a trend, so this was a pretty strong gap down, expected to have some sort of reaction, and by that I mean a second leg in the direction of the gap. Bar 1, we had a bull trend bar. Closing near its high, it's a strong bar, far below the average price. Bears probably don't want to sell it. It's a strong enough bar for a second leg, but it's a big bar, and the bulls don't necessarily want to buy the close either. They might buy a pullback. Bar 2 was a doji, so we rallied above bar 1, but then pulled back. So bar 2 is minimum follow-through for the bulls. There's no bear bar. So it's a bull trend bar, and trend bars are breakout bars, but when you ask what we're breaking out of, you could say we're breaking out from the gap. The market's rejecting the gap down. So again, if you imagine this as a big bear trend bar, we're breaking above the close of that bear trend bar. So it looks like bad follow through. But is bar 1 and 2 enough to reverse this giant gap down? Probably not. This is probably a minor reversal, even though it's a 10.5 point bar on bar 1. Bar 2 is a weak sell signal bar after a pretty strong bull bar. There's probably more buyers below. We're still expecting a second leg to the upside. But overall, this is probably minor, and it might be more of a leg in a trading range. Sort of big down, big up. Bar 3, we have a bear trading range bar. We triggered the low one below bar 2. But bar 3 is not a very good entry bar, and for the bears selling below bar 2, they needed a strong entry bar to convince them to stay short. So with bar 3 being not a very strong bar, bears might buy back shorts if they sold, and bulls are probably buying maybe a 50% pullback of bar 1, expecting a rally for at least a second leg after bar 1. Bar 3 is a high 1 signal bar, and it's a bear bar. And the context is bad. There's probably sellers above bar 3, and probably buyers below, bulls buying some sort of pullback. And 4 tested the low of 3 and then reversed, and it's a variation of an outside bar, even though it didn't go outside to the downside. The lows are equal and the high is above the high of the prior bar, so it functions as an outside bar. The problem with bar 4 for the bulls is that could be the second leg up. Leg 1, pullback, leg 2. Bulls disappointed with the follow through, a doji and a bear bar, so they get this rally and they sell out of their longs. We triggered the high 1 above 3 and found sellers above. And outside bars are trading range bars. So we have a trading range bar and a trading range. Probably buyers below 4 and sellers above 4. 5 rallying a little further, but bar 5 is a nested second leg. We obviously have leg 1, pullback, leg 2, but we also rallied on 4, pulled back, and then rallied on 5. So it's a couple of legs up. Depending on how you look at it, you can see it in a couple of different ways. Some traders will also view it as a wedge. We rallied on 3, pulled back, rallied on 4, pulled back, rallying on 5. Parabolic wedge, breaking out of a channel line, breaking out of the doji on bar 2, but probably sellers in this area. And even though it's consecutive bull bars, one being fairly big, closing near its high, there's probably more sellers above bar 5. Remember the big gap down, and it's fairly bearish coming into the day when you look at the Globex chart. And so you have a couple of minor legs against a big gap down. So it can be pretty dangerous to be buying up here or to be long up here. 6, inside bear trend bar. Traders sold the close of bar 5, and we're reversing down strongly after 2 minor legs up. Remember I said we're expecting some sort of reaction after that big gap down, and by that I mean a second leg to the downside. You consider the gap down from yesterday's close to today's open. That's leg 1. Now we have possibly a 2-legged pullback, and then 6 could be the start of a second leg to the downside. We have 2 legs up, and then bar 6, a bear bar, closing on its low. Bulls who were long probably getting out below 6, and bears might sell below 6. It's a low 2 with a strong signal bar with pretty good context. So reasonable stop order, there might be more sellers below 6. Definitely more sellers, or most likely more sellers above bar 6 if we get there. And then 7, follow through for the bears. Now we have a breakout. 6 was an inside bar, so it's a non-breakout bar. But 7 broke out, and now we have consecutive bear bars. Both strong, closing on their lows. Probably sell the close on 7. Probably going at least a little bit lower. You can argue this was leg 1 and then 2-legged pullback, and this is possibly leg 2. But you can also consider bars 6 and 7 leg 1. Overall in this trading range today, we've had 2 legs up. Now we just have 1 leg down. So it's important to try to look to get short because it's always in short and it's pretty strong and the context is good. And then more follow through selling on bar 8. So now we have 3 consecutive bear bars. And is that the second leg the bears are going to get? Well, probably not, because the gap down was so big. We're expecting not necessarily this range. By the way, let's look at the distance. So it's over a 1% gap down, and that is 61 points. So we already have about a day's range gap down. So do we think the second leg is going to be 3 bars? Probably not. The range of these 3 bars from high to low, about 24 points. So a little over a third of the range of the gap down. So we're expecting more to the downside. And that makes sense because now we have a strong leg 1 breakout here from bar 6 to bar 8. Bear spike, expecting lower prices and at least a second leg down. The bear's probably looking for a spike in channel trend. So worth keeping in mind the bear spike measured move, this price down here. That's a target for the bears. Strong enough breakout. What about buying below bar 1, arguing trading range open? There were bulls buying below bar 1, but there's so much momentum to the downside. You can see bulls who bought below bar 1 immediately got trapped on bar 8. So if we have any sort of rally that tests the breakout point, the odds are the bulls will be disappointed and they'll look to exit their longs on any pullback. There's also bears who missed the breakout and they're looking to get short on any pullback as well. So you have bulls and bears looking to sell any pullback, and they're providing fuel for the second leg down. But really strong breakout here. It's a good looking breakout. The bars are pretty uniform in size. They're growing in size. They're not very climactic. Very little overlap. They're all closing near their lows. Big micro gap from the low of bar 6 to the high of bar 8. It has a lot of things going for it. Plus the overall context is good. Still sell the close on 8, but most breakouts pull back. And now we're getting the first breakout below the low of the opening range, the first 6 bars or so, below bar 1. So the market might come back and test that breakout point. You have bears who sold below 6, maybe even sold the close of 5, and they get this windfall of profits, and they'll look to take profits and look to sell a pullback as well. And then we had a strong bull bar on 9, immediately coming back and testing the breakout point, the bar 1 low. That was a magnet, and even closing above it. But is bar 9 strong enough to buy? And is it strong enough to reverse the bear breakout? Probably not. It's a good bull bar, but there was some selling into the close, and it's the first reversal after a strong breakout. The odds are there are sellers above, but bar 9 might be strong enough for a second leg down, or a second leg up rather. And so we might get a 2-legged pullback before we start finding sellers and start getting the second leg to the downside. Consecutive bull bars on 10, but the context is still bad. There's probably sellers above. We might be testing, we are testing 50% of the bear breakout, and it depends on how you look at it. So let me draw the measured move using bodies. So that's down here. And then I'll reconfigure this so we can see a 50% pullback. That's the red line here. So we're testing the 50% pullback. You can also go from the high of bar 6 So if we go from the high of bar 6 to the low of 9, here's 50%. The market is getting vacuumed up to the 50% level. And again, strong enough up for the bulls. Now we have bar 10, a bad low 1 signal bar, probably buyers below, but it's a minor leg 1. So you can consider bars 9 and 10 a leg 1 breakout, but it's counter trend and it's minor. And it's very similar to bar 1, where bar 1 was strong enough for a second leg, and it got a second leg, but it was minor. And bulls who are buying are scalping. They're not expecting a bull trend. It's a disappointing pullback for the bears. It's deeper than they would have liked, and bars 9 and 10 were fairly disappointing, but we're still below the top of the breakout, and we're hovering around 50%. So probably resistance in this area, sellers above, and probably buyers below 10 for a second leg. Inside bar an 11, low 1 short, but inside bar after a pretty strong rally. Probably buyers below for a second leg. But again, that second leg could be really minor. 12, we triggered the low one and broke out below bar 10, but did not close below. Consecutive bear bars, disappointing for the bulls who bought up here. If you bought the close of 10, you're disappointed with 11 and 12. And now 12 is a high one, but consecutive bear bars, probably sellers above. Outside bar 13. Triggered the high one above 12, and we know it was a weak stop order setup. So there were sellers above bar 12. 13 might be the start of the second leg to the upside. Now, if this starts to sell off, we'll look back and say this was leg 1, and bar 13 was the bare minimum, second leg for the bulls. But there might be a little more to the upside, but 13 being an outside bar in either a bear trend or a trading range, there's probably sellers above 13. The close of 10 is going to be resistance. Bulls who bought the close of 10, disappointed. They'll look to exit on any retest. Leg 1, pullback, maybe leg 2, and then sellers above. And then we're continuing down on 14. And that's disappointing for the bulls. They're getting trapped. They didn't get a retest of the bar 10 close, and now we're falling further on 14. 14 might be a second leg, a minor second leg, in terms of this breakout, leg 1, couple legs pullback, and then a second leg. But there's probably sellers above 14. There might be buyers below, betting on a second leg still for the bulls, but it's a little dangerous because the context, it's still always in short, and there's an increased risk of a downside breakout. 15, inside bar, high 2, high 1 above 12, and now a high 2 above 15, but still minor. So if you're buying for a scalp. And probably buyers below 15, weak sell signal bar. And then we went outside down, 16. And so what it looks like to me, bulls who bought up here, disappointed. There's a weak rally, they didn't get out. And then another weak rally, and again, it looks like this bar 16 might be a give-up bar. The bulls are having a really hard time getting above somewhere in here, this price level. Every time a stop order triggers, the market reverses down. Outside bar 16 in general, probably sellers above, buyers below, but buying below in this context, not as strong. Bulls will argue it's 3 pushes down after a breakout. 1, 2, 3, plus an outside bar, so expanding triangle, testing low in the range of the breakout, still looking for a second leg. But because it's counter trend, there's an increased risk. The bulls buying here are scalping. Breakout 16, and then follow through on 17. It's really weak follow through. It's a doji bear bar, but it's bare minimum for the bears, the absence of a bull body. And so what about buying above 17? It's really not a good buy. It's a really small bar, and stop orders above, in this case, above small bars, the stops usually get run. It's also consecutive bear bars, and the context is bad. It's still always in short. We triggered the stop order above 17 and found sellers above. Now we have bar 18. By the close of bar 18, there's about an 80% chance we've either seen the high or the low of the day. At this point, with this strong bear breakout, this is the defining characteristic of the day so far, plus the gap down. More likely we've seen the high than the low of the day, so we're probably going below bar 9. 18 is a bad stop order signal bar, so you will have bulls buying below for that reason. Still betting that the bull breakout 9 and 10 strong enough for a second leg, and this has just been a pullback, and maybe we get a high 4 here. But the buying pressure is pretty weak. 19, bear doji. What we might be getting here is a little bit of an endless pullback. The bulls hoping for a breakout, pullback, second leg, but the market just keeps pulling back further and further. And again, the buying pressure, not very good. 19 is a doji, possibly at the bottom of a trading range, maybe 9 and 10 was the start of a trading range, and there's buyers below 9. But the danger is we have an open gap from the 6 low to the bar 10 high. So you still have trapped bulls. And again, the context, strong enough leg 1, any pullback is probably minor. There will probably be a second leg, and the bear spike measured move is still in play. Outside up on 20, it's a really good looking bull bar. Some bulls will buy above it, betting high 4, leg 1, deep pullback, leg 2. But because we had such a deep pullback, the odds that bar or that subsequent bars get above bar 10 are pretty low. If we get to the close of bar 10, bulls will be happy to exit their longs at that price. You can see we got to the 50% pullback level and then didn't really look back. So it's a strong bar on 20, but it's an outside bar. And then you could argue 16, 17, strong enough for a second leg. There's a minor second leg, but this could all be considered one leg. Now we have a deeper pullback, probably sellers above. Even if we get above 16, probably sellers above, plus the bar 10 close is resistance. So it's a strong looking bar, but it's an outside bar in either a trading range or a bear trend. And then 21, sellers above. Bears selling the close. Whenever you have a good looking bull bar or a rally in a bear trend or a bear channel, bears sell rallies in that context. So bull breakout 20, but no follow through 21. Now bulls will argue we have a low 1, 21, at the bottom of a trading range. But the context still not very good. The bulls need more buying pressure, and we have lower lows here, lower highs here, so this could easily still be a bear trend. We triggered the low 1 below 21, and there were buyers below, and 22 becomes a second reversal, 20, and then 22. But there are probably sellers above 21. The bulls are hoping we have a double bottom, break above the neckline, go for a measured move up. But there's probably sellers here, sellers here, sellers here, scaling in higher. So the upside is probably limited. And then you can see we tested near the low of bar 1 once again, and then reversed down. And now we have a low 2 on bar 23 in what could be a bear trend, a bear channel. So bulls might exit below 23. Bears might sell below 23. It doesn't look great because it looks like it's at the bottom of an overall trading range. But you can also argue that this is a triangle and a bear flag. Strong bear breakout. We're going sideways, but we've gone sideways for less than 20 bars, so the breakout direction still favors the downside. 24, we triggered the sell, went a fair distance below 23, but then reversed up. So now 24, a third reversal up. But it's a problem that it's a big bar. Big bar means big risk, and you're buying at resistance. Every time the market is in this area, we find sellers. So there might be more sellers above 24. And I said this one a fair distance below, strong enough breakout down for a second leg. Plus, I still have this breakout in mind, and this is probably just a bear flag, and there will probably be more to the downside. The bulls are not doing enough. Now, the bulls will argue this could be a major trend reversal with this bear spike. We have a trend line break. We've gone sideways. A couple of decent bull bars now. 20, maybe 15. 9 and 10 were pretty good. 24. But even if this is a major trend reversal setup, the probability isn't much better than 40%. So bulls might buy above 24, but if it hesitates at all, they'll look to exit. And so we might have a lower low, double bottom with bar 9, and bulls might even argue 3 pushes down. The gap down, 1, 9, 24, good signal bar. But the bulls need a good entry bar now too. And then they got 25. And that's disappointing. Sellers above 25, maybe buyers below, tight trading range, bad for stop orders, but the increased risk of the downside breakout. Inside bar 26, sellers above, buyers below, but buying not the best in this context. $27 is a buy reversal bar with a bear body, but it's a bad buy setup. It's a weak signal bar, 3 bars without a bull body. The context still favors the bears. All the bars today have been below the moving average. There are probably sellers above 27, maybe buyers below, but they're buying for scalps. And then inside bar 28, not good to buy, really not great to sell either, but still always in short. 29 bear breakout attempt, but then reversal, bull bar closing on its high, 3 pushes down, 1, 2, 3. We might get a minor correction, but this is a really minor pattern. We might come up and test, the 27 high, but the upside is probably limited. 30, bull breakout. It's a good bar for the bulls, but it's pretty small, and it's in the middle of this tight trading range. So again, the upside probably limited. Might be a strong enough breakout for buyers below 30 in a second leg, but still always in short, so bulls buying are scalping. Outside bar 31, disappointing for the bulls. Probably sellers above 31 and maybe buyers below. You can see there were buyers below 30. We might get a minor second leg, but that could be as small as the tail on the next bar, maybe testing the close of 30. And then instead 32 just sold off without even really rallying. There's a tiny tail on top, but not much. Micro double bottom with 29 and 32, but a bad buy signal bar, probably sellers above. Market's getting squeezed. At some point, either bears or bulls are going to give up. And it looks like it has a wedge shape. There's a lot of overlapping bars, and that is true. But the problem with buying, we have all the bars completely below the moving average, the context coming into the day, the big gap down, and then the strong bear spike on the open. We're still probably going at least a little bit lower. Another target would be a measured move of the triangle, which is basically just bars 9 and 10. And that would be somewhere down here. And we're getting a bear breakout 33, 3 consecutive bear bars. Pretty good breakout. Might be 1, 2, 3, climactic, third push down. But the reality is, this was breakout mode, a lot of trading range price action. Now we're getting another breakout, which looks strong enough for a second leg. Sellers above 33. It might be sell to close on 33. 34, we have a pause bar inside a bull trend bar, but it's small. Probably sellers above at breakout points like the bar 24 low. You can see we tested it, we rallied a little bit above it, and then reversed down. Low 1 on 35. It's not the worst sell in the world. This was a pretty strong breakout, expecting lower prices. And it's probably better to sell below 35 than buy below. This wasn't a very strong breakout. It's actually an inside bar, so it's a non-breakout bar on 34. There might be a small second leg, maybe buyers below, but the upside's really limited here. 36, bear breakout bar. It's small, but if a bull bought below 35 and 36 is their entry bar, they're probably disappointed, and they might just look to exit their position and reassess. So bear breakout down to 33, pullback, maybe starting a second leg down. And then overall here, leg 1, pullback, this might all be a second leg. We're keeping the bear spike measured move in mind, and it looks like we have a spike in channel bear trend. Lots of sideways price action. You can see the channel phase is really two-sided, and things become really unsure. 37, a doji. We fell below 36, but found buyers below. But 37 is a bad buy signal bar. It's a second reversal. We reversed above 34, pulled back. If we trigger above 37, that would be a second reversal, but there's not enough buying pressure. 37 is a weak signal bar, so probably sellers above. Another doji, 38, so the same thing applies. Weak signal bar, probably sellers above. And minor reversal at best for the bulls. 39, we're continuing to fall. We have a micro channel since 35. All these bars have lows or have highs below the high of the prior bar all the way down. Not very strong. There's dojis, lots of overlap, but there's still an absence of buying pressure. The bulls have one bar in about 10 bars. Finally, another bull bar on 40. Micro double bottom, 38 and 40. Bull bar closing on its high, but it's pretty small. And it's possible this was all one leg, even though it looks like two legs, and there was technically a pullback. This was all pretty tight. We might get maybe a two-legged pullback, some sort of correction, before a second leg down. Bull breakout on 41. Good looking bull bar, but still completely below the moving average. We're testing an area where bulls got trapped earlier. There's a bull who bought the high tick of 35. So if we come back to that price, they're probably going to exit. So probably resistance above and limited upside. Plus you have traders who will sell the moving average. Bears have been selling below the moving average all day long. So if they have a chance to sell at the average price, they're going to take it. That's a 20 gap bar setup. 42, testing the moving average and closing above it. Bull breakout, but bad context. Strong enough breakout and tight channel, first reversal up will probably fail, but this is enough damage that the market might be in a trading range now. Remember, in bear channels, bears sell rallies, so this would be an opportunity for bears to sell a rally at the trend line. So there might be more sellers on the close of 42. And that's what we've got on 43, inside bear bar. Now, it's strong enough up 40 to 42 for a second leg, so that might reduce the number of sellers below 43. We're still on this the bear channel trend line, so there hasn't been a major trend line break. You can argue that this trend line, this tighter trend line, got broken. So here's a bear trend line break. Now a retest might lead to a major trend reversal, but more likely it will lead to a trading range 60% of the time. And then 44, we ended up falling. We're getting sucked back down to the channel line to support. Low one below 43. Context was okay because there was a rally and then a strong bear bar at the trend line. And then consecutive bear bars, good for the bears, but not really breaking out of anything. You look to the left, and we are closing at a new low, but just barely. We still need a follow-through bar. And this is a classic example of where bears will look to take profits, because this was disappointing enough that bears will look to take profits below. And bulls know that this was strong enough for a second leg. So rather than buy up here, bulls will buy below. So probably buyers below here. 44 might be more of a buy the close bar, even though it's in a bear channel. 45, we got follow through for the bears, but it's really small. And now we might have a bear channel that's gone on for many bars. The bulls were able to get a close above the moving average, but they were not able to get a bar completely above the moving average. So the bulls are still not all that strong. But still, the downside might be limited after this rally. There were probably buyers below. And then 46, outside up, but not a very strong bar. And strong enough bear breakout that any rally will lead to sellers above and a second leg down. 42, low. Bulls who bought below, betting it's a micro channel, strong enough breakout for a second leg. If they bought here, they got trapped. 46 is coming close to that price. And if we get to that price, there's probably sellers above the outside bar. Inside bear reversal bar 47, but the context isn't ideal. We have an inside bar and it's a low in a channel, so there actually might be more buyers below, but the buyers may not come in until below 46. And then 48 ended up reversing up. 48 might be a second leg, so we went up on 46. Inside bar, we paused on 47, and we're rallying again on 48. But keep in mind, 42 low is resistance. Now we're getting 2 legs up, testing resistance. The upside's probably limited. And then instead, 49, a little bit of a surprise breakout, breaking above the moving average. But now think about buy the close bulls 42. If you bought the close of 42, hoping this would just keep rallying, and this was your follow through, what are you going to do in a retest? You're going to look to exit. This was disappointing. So the market might be in more of a trading range now. Probably sellers above 49, even though it's consecutive bull bars. And then we rallied a little bit higher, did not quite get to the close of 42, but we did have sellers above 49. 50 is a bear reversal bar. You can call it a low 2. Technically, it's a low 1. This is a micro channel, but we rallied, paused, rallied again. Now we have a low 2. Plus, it's a double top. All double tops are low 2s. So it's a nested low 2, low 1 below 43, low 2 below 50, and low 1 below 47, didn't trigger, and then low 2, 50. We're probably going more sideways here. Big up, big down, a couple legs up, probably expect a couple legs down. 51, triggered the stop order sell, but it's a disappointing entry bar. But the flip side, buying above 51 is a bad trade. It's a high 1, high in a trading range, or a bear channel, consecutive bear bars, probably sellers above 51. 52 triggered the high 1, and then there were sellers above. 52, it's a weak sell signal bar, but it is a micro double top and a second reversal down after this rally. It's a small trend line break, retest, bulls who bought the close of 49, disappointed 50, 51, they're exiting their longs on 52. So there's an increased risk we go lower. There might be buyers below, and the reality is there are buyers below, but probably not until somewhere in the lower third. So we're going lower on 53. Bear trend bar, probably going lower. We have sell the closed bears on 45. They got trapped on this outside bar, 46, rallied all the way up here. Now we're getting 2 legs down. Probably go a little lower, but if we do, the downside's probably limited because of these sell the closed bears who got trapped. 54, we're pausing. 2 legs down, but 54, not a very good buy signal bar. There's sellers into the close. It's an inside bar. It's following a pretty strong bear bar. 54, though, it's a bad low 1, probably more buyers below 54. And then 55, we're selling off a little lower, but now we have 3 legs down, testing support. Down on 51, pull back, down on 53, pause, and then down on 55. And then we have support not very far below. So there might be more buyers below 55, even though it's a bear trend bar. And then we went outside up 56. Outside bar, but inside of a trading range. The market's getting squeezed. You can call it a triangle. We're getting now higher lows and lower highs. And at this point, when we have a higher low, the bulls can argue this is no longer a bear trend because you don't get higher lows in bear trends. You get lower lows and lower highs. So whenever the market's in a bull trend and a bear trend, you know it's in a trading range. In this case, we have a triangle and it's contracting. Breakout mode. But the bulls haven't done enough for a major reversal. When you look at the more meaningful trend line for the bears, this would be it. And you can see the market's been pretty well behaved within it. So there hasn't been a major trend line break yet. Bear channel means bull flag, so the upside breakout is more likely. But there is no breakout until there is a breakout. We still have the measured move target below. We don't necessarily have to get there, especially considering all the two-sided price action we've had. This is a bear channel, but there's been a lot of trading range price action. So outside bar 56, but in either a bear channel or a trading range, there's probably sellers above. 57, testing the bear trend line. sellers above the outside bar. Now we have a bad stop order sell signal bar. There's probably buyers below, forcing you to sell on a stop order in the middle of a tight trading range, probably going more sideways here. 58, we have a second leg up for the bulls, but remember the resistance, 42 close, bulls are trapped. Now we have leg 1, three-legged pullback. Leg 2, it's a nested second leg. We rallied on 56, pause 57, rallying on 58. And 58 looks a lot stronger than 56, which is characteristic of second leg traps. So 58 might be a sell to close bar. 59, disappointment for the bulls. Testing the 42 close finally, even breaking above it, but not closing above it. So there's no successful breakout. We have an outside bar, a pause, buy climax, pause. The upside is probably limited. The bulls are exhausted, 2 legs up. And overall, in a trading range. High 1 on 60, we pulled back below 59. Now we have a reversal bar on 60, but the context is bad. Just look to the left. Here's a swing point. We're still below this. Well, you could argue this was a major lower high because it's a lower high from here. We broke out strongly to a new low. And so now we have a breakout above a major lower high, which tells you the market's in a trading range. But we're still not above this one. And this one, there are sellers above, and that means there's resistance above. The upside's probably limited. So high 1, but could be a third consecutive buy climax. There might be sellers above this high 1 on 60. 61 rallied close to that higher low, or that lower high on 31, and then failed, reversed, closed on its low. But 61, not an ideal sell signal bar because it's fairly big, and the channel up for the bulls was fairly tight. So we might get a small, minor second leg, and the bears might wait for a second reversal before looking to sell. Now you could argue the bulls have a trendline break, bear channel, trendline break, but look at the trendline break. One close above, and then sideways. Another close, but it's inside this trading range bar, and then a trading range bar, 61. So it's fairly weak. The market just looks like it was in this strong bear trend here, and the trend line just gradually got weaker and weaker, more and more gradual. So there might be buyers below 61 because it's not a very good stop order trade. But the context isn't great because you're buying high in a range after 3 pushes up. Another reversal bar on 62. Bulls who bought below 61 probably disappointed with their entry bar. Now we have a high 2 on 62, probably sellers above. 63, another trading range bar. Bad high 2 above 63, sellers above, probably going at least a little bit lower. 64, almost outside down. It tested the 63 high and then reversed and closed on its low below the moving average. A little bit of an endless pullback. The bulls were hoping for this to be a strong enough leg for a pullback in a second leg, but the danger is that it was already 2 legs up, high, in a trading range. Now we're getting an endless pullback. 64, a little bit of a give-up bar, so it might go a little lower. 65, going a little lower, sellers below 64, we closed below, but the downside, there is support as we go down. Bears, 3 pushes down, they got trapped, selling here, and then the low of the day will also be support, probably buyers below. 66, a pause bar, still a micro channel since 61, strong enough for sellers above, so 66, probably sellers above the bar. There might be buyers below, but this is all one leg strong enough for a second leg down. Outside bar, 67, trading range bar within a trading range, in the middle of this tight trading range. Sellers above, probably buyers below, but they may not come in until below 56. 68, we went a little bit lower. You can see we tested the close of 55, to the tick, and then reversed up. But this is not a good stop order trade. It's a trading range bar, tight trading range, still expecting a second leg to the downside, probably going at least a little bit lower, probably sellers above 68. 69 bull breakout, but it did not close above many bars to the left. It really only closed above 68, and it closed below its midpoint, so you can argue this is a bear bar. 69 is a bad stop order short. There's probably more buyers below the bar. It also moved a reasonable distance, but the problem is that you think about what the breakout was. We're just testing resistance. Bulls buying somewhere up here, got trapped, disappointed, and then two-legged rally here. 69 was bulls. Bulls used 69 to exit losing longs. They're not buying aggressively, hoping for higher prices. 70 inside bar, trading range bar. Sellers above, buyers below, but increased risk that we get a second leg down. 71, we have a second leg up for the bulls. This bull breakout went far enough for a second leg, and we're getting it. But 71 is a stronger bar than 69. Again, characteristic of second leg traps. Testing resistance, probably up a limited upside. Sellers above. 72, we have a doji bar, inside bar, actually at the high. Not an inside bar, we actually triggered above 71. But buy climax, pause, look to the left, we're high in a range. Probably sellers above 71. Dangerous to be holding a long here. Outside down 73. This might have been leg 1, deep pullback, maybe 3 legs up. I'll draw it. So this was a micro channel until here. That pullback, then a minor second leg was the start of a first leg up. Second leg, third leg. Now we have a double top, outside down 73, probably going lower. 74, bear breakout crossing the moving average. Strong enough bar, probably going lower. Buyers probably not coming in until below 68 or below 56 or even the new low. There's a bull trend line. The bull's hoping the bull trend line holds, but now you can look at it as a bull channel, and bull channel means bear flag. 75, we're falling below the bull trend line. Strong enough breakout for a second leg. You can argue it's a second leg already and possible second leg trap, and that's true. There's probably buyers below, but 75 is a bad stop order trade. There's probably sellers above 75. 76 inside bar, but still tight enough down for a minor second leg at least. 76 being an inside bar reduces the probability, even though it's a bull bar closing on its high. It's completely below the moving average, probably sellers above. We rallied on 77, fairly high. We tested a breakout point. There were bulls who bought below the bad signal bar 72. They got trapped on 73 and these bars. We rallied back to that price, tested it. The bulls who bought exited. The bears who missed the sell-off sold up here, deep pullback for the second leg. So probably going at least a little bit lower, but there might be buyers below 77. It's a low one, possibly low in a trading range. But then instead 78, fairly strong bar, probably going at least a little bit lower. Support below here, and support below the low of the day. We broke below both of those lines and then closed above both of those lines, so there were buyers below both of those support levels. 79 is a bad stop order signal bar. It's 2 legs down, low in a trading range, so not ideal to be selling, but also not a good buy, probably going sideways. Inside bar, 80. Same as 79, except breakouts are even lower probability. It's an inside bar. The range is contracting. We're in the lower third. It's probably better to be long down here. Nested, 2 legs down, 1, pull back, 2, 1, pull back, 2, and again, low in this range. But we have one more bar left in the day, so not worth really doing anything. Probably sellers above and buyers below. And then 81, a bull trend bar, closing above, but it's a fairly small bar. For always in today, I thought it was always in short coming into the day with the huge gap down. And you look at the Globex market, and it's a tight bear channel. So I don't think bar 1 was enough. You need at least a couple of bars, and bar 1 did not get follow through. And then 4 and 5 not strong enough. It was a second leg, nested second leg, as I mentioned earlier. 1, 2, and 1, 2. So still always in short at that point. So whenever you have rallies and it's always in short, traders will sell. So there were sellers on the close of 1, above 1, sellers on the close of 5, sellers above 4. And then if it wasn't clear, 6, 7, and 8 made it clearly always in short. And from there, it never became always in long, except once the market gets more and more sideways in a trading range. You can argue it's always in long when it's low in the range, but always better for me to think about it in terms of buy low, sell high, and scalp when the market's sideways, rather than thinking in terms of always in. 9 and 10, not strong enough to flip it to always in long. Too strong of a bear breakout. This is minor, it's a 50% pullback. Through here, the bulls never did enough. Major trend reversal attempts on 20, 24, 29, they never did enough. Then we got this downside breakout, still always in short. This breakout was a problem for the bears because of this rally. This rally wasn't enough to make it always in long, but it was enough disappointment and strong enough to expect buyers below. And then you have 3 pushes down, 24, 33, 46. So it's a sell-off, but probably low in a trading range. So you can argue now we're in a trading range. So if it looks always in short, 3 consecutive bear bars, but the context is better to buy, it might be always in long based on context. At this point, the market, big up, big down, probably in a trading range. So then we get these consecutive bull bars, 48, 49, but it's already a second leg testing a prior lower high. So this context might be always in short, even though it's consecutive bull bars. For stop order trades today, I thought you could sell below 6, sell below 7, sell below 8. It's aggressive to sell below 11. It's a low one after a strong enough rally for a second leg, but the bulls just never really got it. We ended up getting an endless pullback in terms of that breakout. And then in here, hard to sell on stop orders. I mean, there were traders buying and selling on stop orders. Like, for example, let's say bar 24. I mentioned this earlier. We have tight bear channel, the breakout, but then we get this trend line break and we go sideways. Now we have a lower low, double bottom, possible major trend reversal above 24. It's reasonable to take that buy, taking a chance, but I think I mentioned this earlier. You need the trade to go your way immediately, and so you need no hesitation. You need a bar like bar 9, or even better, closing all the way up here. So traders will buy above 24, give it a chance, give it 20, 30 seconds. But if it starts to stall and reverse, they can give up on the trade and just bail out. So you can see we rallied a little bit on 25, but then ended up being disappointing for the bulls. The same applies on 29, but it's a smaller bar. You can argue it's a wedge, still a double bottom, possible major trend reversal. The problem with the major trend reversal argument here, the bulls just never got a rally above the moving average. And the context was really bearish. I thought you could sell below 35, low one short after a decent bear breakout. Aggressive to sell below 43, but not crazy. Let me back up. Here we had this bear breakout and then a second leg, and the second leg subdivided into 2 or 3 legs. So you get bar 40. You can also buy there, expecting a test of the bar 35 high, and that's what we ended up getting. But that's a scalp, and that's exactly what bulls did. A couple bars in their direction, they're not expecting a bull trend, and they get out. Reasonable to sell below 61, 3 pushes up, high in a trading range. And then 2 legs down to 68, but not a very good stop order because it's a trading range bar. And then I thought you could sell below 73. Double top, nested double top, it's 2 legs up here, 2 legs up here, maybe even 3. 1, 2, 3, which would be a truncated wedge where the third push does not exceed the second. So 1, 2, 3. This becomes a lower high with here. And for limit orders today, bar 1 was strong enough for a second leg, and bar 2 was a bad low 1, so probably buyers below bar 1. Sellers above bar 3, bad high 1, scaling in, they made money. Bad high 1 on bar 12, sellers above, they made money. Also, you can consider the 50% pullback of the bear breakout somewhere around here. Limit order sell in there, plus testing this breakout point, bar 3 and 4 low. All through here, these are bad buy setups. You can sell above 12, sell above 15, sell above 17, sell above 19. 18 was a bad low 1 at the bottom of this big down, big up. So you could buy below 18 for a scalp. Bad low 1, 21. You could buy below it. Not a very good reversal. Stop order above 22. You could sell above. And it's just back and forth all through here. Very tight limit order market. Buyers below, sellers above, all the way through until you get here eventually. Bulls buying below get trapped. We get a second leg. The retest. Bulls who bought below, anywhere, buying the low of this range, trapped on 33. They could scale in, avoid a loss, and that's what leads to a second leg down. And then bad high 1, 51, sellers above. 3 legs down, 54, you could buy below it, scale in lower. Bad sell setup on 59. This is a micro channel. It's a trading range. Signal bar, not really ideal to buy here because of when you look where you are. You're at a point where bulls got disappointed. You're high in a trading range. So bulls buying below 59, they know they're taking a chance, and they know that if they are buying, they're buying for a scalp. They're not expecting a bull trend. 60 was a high 1, but buy climax, pause, buy climax, pause. And then a third push, high 1, high in a trading range, sellers above 60. Micro channel down, not all that strong, but the first reversal up is likely to fail, so 66, sellers above. Then you get an outside bar, 67, testing support, lots of sideways price action on the way down, and then a breakout, so a pullback, and then a second leg. You could buy below 67. Sellers above 68, but they may not come in until higher because this is more the middle of the range. There's sellers above, like up here. Sellers above 72. You could argue it's a high 1. It's not technical, but it's a breakout and a pause after 2 legs up, high in the range, and it's a trading range bar. And then strong enough breakout down here, inside bar 76, you could sell above for a second leg down. And where do we go tomorrow? Well, the market's in a tight trading range the past 5 bars or so. So there might be buyers below July 11th and maybe below here and here. But we had this gap, which, let's look at it this way. It's a strong bear bar. And the problem with the strong bear bar is that it's in a tight trading range. But you can argue this rally, this bear bar is a pullback. We rallied a little more, 3 pushes up, it's nested. So here, 1, 2, 3, and then up here, 1, 2, 3. Strong enough breakout for a second leg. Now we could get a deep pullback because it's a trading range. We could test breakout points like yesterday's low. But I do think there's sellers within the 50% of this bar, today's daily bar, in the upper third at the 50% level. Probably sellers in here for a second leg down. But there might be buyers below here. It's a tight trading range, limit order market. So good looking bear bar. But again, it's kind of similar to yesterday's bar where it's a trend bar on the daily chart. But look at the bar on the 5-minute chart, and there's a lot of trading range price action. So the downside might be more limited. We do have that increased chance that we continue to sell off and test the moving average before we find buyers, plus the breakout point here. And please feel free to leave questions in the comments and include timestamps for any question specific to this video. Alright, hope everyone has a good rest of their night. Thanks for watching.